Aloha, everyone. I hope you had a great weekend and a good start to your week. Overall, stocks are a bit rocky as we go into the new week. I'm going to start off with the S&P 500. The S&P 500 pulled back today 0.17%. Volume was much lower than the day before, obviously, session before, Friday, options expiration, but it was well below average. So it's a good pullback despite the final 10-minute flush that we saw in the market today when a huge sell program hit. You can see MACD is down here in oversold territory, and so is TSV. So that's good overall if you're still bullish on prices. I mean, it's better to be oversold within an uptrend than overbought if you expect higher prices. And overall, things look solid, everywhere. In New York Stock Exchange, you can see the similar situation. TSV and MACD coming from oversold territory. Dow Jones Industrial Average, same thing. But overall, we have to realize in regards to the uptrend line, we're at the upper end of the range, so it's always going to be harder to make gains here. And that's especially true in the NASDAQ, where as you can see, going way, way, way far back, if we just connect the uptrend line here, you can see that we're near the top part of it than the lower end of the channel trend line if you draw it. But overall, it's a good pullback today. MACD is in oversold territory. TSV is around the mid-range in the NASDAQ. You can see the relative strength line continues to lead higher. That's excellent. That's what you want to see. So it would be healthy overall, to be honest with you, if we pull back on lighter volume over the next few days, preferably all week long, and then we get rid of what's weak and we keep what's not, and we keep what's strong, I guess you could say. The Russell 2000, same similar situation. You can see TSV and MACD, neither one went oversold. So I guess if you want to use it as a momentum oscillator, that's good confirmation if you could expect higher prices with these oscillators remaining around mid-range while the big caps are in oversold as these indexes hit new highs. I did have some sell signals. AGIO hit half of my sell stops intraday today. The other half I had at these lows, but now I'm going to move it all the way back to these lows because I'm going to still use the 200-day moving average as a final cut loss level, because don't forget that we have gains from all the way back here, so we're still up over 100%. So I don't want to get shaken out of my full position or my remaining position from the initial buy. So it now gets taken to the 200-day moving average. Wherever the 200-day moving average is at, that's where my new sell stop goes, and I will continuously adjust it as AGIO sells off. And if AGIO sells off, let's say tomorrow on huge volume, red bop, and finishes at the low a day, probably sell another half, and then we'll hold the rest to the 200-day moving average. HRTG closed below the 20-day moving average on above average volume. It's still holding above the gap up lows, but you know what? By now it should have rallied, so I'll go ahead and take 25% off the table. One sell stop will be here at these lows. Next sell stop will be here at these lows. But 25% of HRTG is coming off the table. I have not liked how it's acted since this day when it decided to stop moving higher, and each day I've been waiting for this partial sell signal, and here it is. RLYP also on a closing basis, it's a 25% sell signal. Since it's still above these support levels, what I'm going to do now is my current sell stop is at 36.99. I'm going to move that up now to 37.18. If it moves below 37.18, I'll be all out of my RLYP position. I have not liked the way that I have handled this position, the way it's traded since this long signal back here. So while RLYP is up 15%, I might have like a 2 or 3% gain in it because I would have been shaken out of some here, bought it back here, and everything's going good. But then I think I got shaken out of half here, put it back on here, managed to not get shaken out there, and now we're going to get shaken out again. So it's been mishandled by me, but RLYP is also 25%. ISIS, it's a 50% sell signal. It came close to my final cut loss level, which is 67.79. Came very close, but it's now closing below the 20-day moving average and erasing all of the gains from that big, powerful day where it looked like ISIS was ready to just blast off on heavier volume. So it's a 50% sell signal. I'm going to move up the final sell stop to just below the low a day, 68.63. Or you know what? I scratch that. I'm going to take that back. I'm going to go ahead and keep it here at 67.80 just because I could see a quick fake out and reversal higher. Overall, the uptrend is still intact. If you look at a weekly chart pattern, it is a reversal weekly bar, but it isn't ugly yet, so it's just 50% sell signal. The big sell is UAL. UAL would have been a 100% full sell signal if today's volume would have been above average, but it's below average. But you're like, but what about yesterday? That's a pretty big reversal on huge volume. Yeah, but it was options expiration related, and technically it closed higher than where it opened. So, I really need to count this day. I would have never, this move, I want to take some off here. I only know now here. But if we combine the 2 days, yeah, go ahead. You can sell it all off. Me, like I said, my commissions don't cost me shit. They're only $1 a trade. Each trade I take is normally at least $1,000 in capital. So it's not a big deal. So it's closing below 68.19 here. So it's going to be a 75% sell signal. And then I'm moving my final sell stop from here, 64.30, to here, 66.08. I'll give it back to when it started to uptrend again off the recent lows to prove that it's totally wrong. So 66.08 becomes my now final sell stop, but 75% of the position has to go. The most surprising thing tonight is that I have 4 new long signals. AMWD profiled it this weekend, breaking out on a heavy volume. CanSlim quality, perfect speculator scan quality, and in the price volume surge. That's a 6% new long position. The problem is short base, so you got to keep tight stops. You have to. This has to blast off immediately or else you got to get out. ABMD, CanSlim quality, perfect speculator quality. Another pocket pivot point signal. Once again, short base. It's got to blast off higher, basically go climax parabolic, or else we got to cut out immediately. So tight stops. But because it's in both of those scans, this is technically a 5% position in this market environment. EPAM, high quality CanSlim stock, and a perfect speculator scan stock. That's 3 of them. That's right. AMWD, ABMD, and EPAM. They all have an A and M in the name, and that's just interesting. But once again, pocket pivot point signal breakout. This was also confirmed in the new high scan, so it would be 5.5% of the account capital. Once again, short base. It's got to break out, move immediately, or else we start cutting losses. This is one where I would put half of my sell stops, no matter what, below the low a day. Like the UAL, you're like, how come half of it wasn't sold intraday? Because I only use that one sell stop at the low of the basis because the market's been so strongly uptrending that there was no need to. Now there is. But EPAM, got to keep the tight stops again. Jack profiled it this weekend on StockTwits also. Pocket pivot point signal on Friday. Finally breaking out today. New long signal confirmation. Once again, it's got to blast off higher immediately or else we got to cut our losses. There's no if, ands, or but about it. And then FRGI, CanSlim quality stock and a pre-perfect speculator scan stock. Jack, by the way, is pre-perfect speculator scan. ABMD, AMWD, EPAM perfect. Jack pre-perfect. FRGI pre-perfect. Once again, has to blast off higher immediately or else super tight stops to cut our losses if we're wrong. There wasn't a whole lot of other action out there, so we'll go ahead and wrap the video up there. I also flagged IGT. This is a blast from the past. I think, 2000 to 2003. I remember this one because this was a stock that went up whenever the market sold off from 2000 2001. I was trying to think, why does this one stand out to me? But that's it, because I remember this was a stalwart during a time of market upheaval.